Warren Buffett, a business prodigy, started his investment journey at a young age. He bought his first stock when he was just 11 years old, and even installed pinball machines in local shops using his savings as a teenager. Despite being rejected from Harvard, Buffett went on to become one of the world's most famous and wealthy investors. Buffett is now the CEO of Berkshire Hathaway, a company that was originally in the textile industry but has transformed into a highly valuable stock. People admire Buffett's investment advice so much that he is nicknamed the Oracle of Omaha, after his hometown in Nebraska. In fact, Warren Buffett quotes is one of the most searched phrases in the online wealth management industry. So why do many people seek investment inspiration from Warren Buffett quotes? Well, his quotes are entertaining, concise, and easy to understand. They are funny, sharp, and filled with wisdom. Warren Buffett has become a philosopher and a revered figure in the investment world. However, with the internet overflowing with countless lists of Warren Buffett advices, it can be overwhelming to find the most valuable ones. That's why we have curated a top 10 inches list that takes a more nuanced approach to long-term investing goals. Long-term investing is the main focus of Buffett's philosophy, and also the approach embraced by Sarwa. If you're looking for inspiration for your own long-term investment goals, we've compiled our favorite Warren Buffett advice to guide you. These advice offer valuable insights that can help you on your investment journey. Welcome to the Voice of Wealth. Number 1. The most important of the Warren Buffett quotes. Rule number 1 is never lose money. Rule number 2 is never forget rule number 1. Warren Buffett has a golden rule for investing, which means a very important guideline. He believes that the most important thing when you invest your money is to protect it and not lose it. This is called capital preservation, and it should be the top priority for any investor. To put it simply, Buffett is saying that when you invest, you should be rational and make careful decisions. Don't let your emotions or impulsive actions guide you. Number 2. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. One common mistake when understanding Warren Buffett's value investing is to think that the sole criteria for buying a stock is that it should be undervalued. However, this quote clarifies that misconception. There are companies out there that may be undervalued but have poor fundamentals. Just because a stock is undervalued doesn't automatically mean it's a good investment. The main focus for an investor should be whether the stock has strong fundamentals and if the company itself is exceptional. Only after determining that a company is truly exceptional should you consider whether it's undervalued or overvalued. Number 3. Risk comes from not knowing what you're doing. Doing a little bit of research can go a long way in reducing risks when it comes to investing. Warren Buffett, who has a knack for explaining things clearly, reminds us in this quote that studying is essential. Sometimes investors tend to forget this advice, especially when they have experienced some success. It's easy to get caught up in positive feedback and become complacent, but that can be misleading and risky. Instead, following the wise approach of a good teacher, Buffett emphasizes the importance of doing our homework. We should research and understand the rules of investing, thoroughly study the holdings of ETFs before deciding to invest in them, and learn from historical data. All of these factors play a significant role in improving our understanding of the market and reducing the risks associated with participating in it. Number 4. Our favorite holding period is forever. When Warren Buffett said you shouldn't hold a stock for 10 minutes if you're not willing to hold it for 10 years, he didn't mean you have to hold on to a stock for exactly 10 years. The point he was making is that if you're not prepared to hold a stock for the long term, you shouldn't hold it in the short term either. Buffett actually prefers to hold stocks indefinitely, emphasizing the importance of focusing on the long-term perspective. This means that Buffett looks for stocks that he believes will be worth holding on to for many years to come. Instead of being concerned with short-term opportunities, he pays attention to the company's fundamentals. He considers factors like the company's ability to innovate in its industry, establish a competitive advantage, and consistently increase its profitability. This quote is particularly relevant to passive investors. Rather than worrying about short-term fluctuations in an exchange-traded fund, ETF, they should focus on the ETF's long-term potential and its fundamental qualities. They should consider things like diversification, low expense ratios, ratings from sources like Morningstar, the reputation of the ETF provider, liquidity, and how closely the ETF tracks its underlying index. Number 5. Price is what you pay, value is what you get. This famous saying from Warren Buffett gets to the core of the value investor approach and reveals how Buffett achieved his success. When Buffett didn't get into Harvard, he went to Columbia Business School instead. There, he learned from Benjamin Graham, who is known as the Dean of Wall Street today. Buffett was greatly influenced by Graham's most important work, The Intelligent Investor, which outlines the philosophy behind value investing. In simple terms, value investors search for stocks that are priced much lower than they should be in the market. They believe that the best opportunity is to find excellent companies that are currently on sale at a low price. To be successful at value investing, you should aim to learn more about companies in the hopes of identifying those that are undervalued and present great investment prospects. Number 6. The most important investment you can make is in yourself. There are 2 important areas where you should always invest your efforts: improving your ability to earn money and learning how to make your money work for you. No matter what you do for a living, strive to get better at it so that you can offer more value and increase your income. However, it's important to remember that as an individual, you have limited hours in a day and a finite number of working years. On the other hand, money, being intangible, has the potential to work for you 24 hours a day, indefinitely. That's why it's crucial to invest in your financial education. By learning about how money works and exploring different avenues for growing your wealth, you can make your money work harder for you in the long run. So, in addition to improving your earning ability, focus on expanding your knowledge about managing and investing your finances. Number 7. Someone's sitting in the shade today because someone planted a tree a long time ago. This quote is an important part of Buffett's approach to long-term investing. What he means is that you need to think about the bigger picture in life and in your investments. The main idea is that it's never too early to start thinking about your future and the path you want to take. Just like a tree takes time to grow, smart investments also need time to grow and become profitable. So, it's important to start early, be patient, and allow your money to grow over time. Number 8. The most important quality for an investor is temperament, not intellect. Being a disciplined investor is crucial for building wealth because it means understanding that market ups and downs are normal and that being patient pays off in the end. In this quote, Warren Buffett addresses a common reason why many investors fail. Humans have a tendency to act irrationally, especially when they perceive the market is working against them. However, successful investors learn not to constantly monitor the market and make impulsive trades. Instead, they remain calm and composed. These disciplined investors are the ones who ultimately achieve the greatest rewards over the long run. Buffett emphasizes that growing wealth doesn't necessarily require being smarter than other investors. It's about being disciplined in how you react to the market's irrationality. Number 9. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. This quote gives us a great understanding of how Warren Buffett thinks about the active versus passive investment debate. Buffett agrees with famous passive investor Jack Bogle, who founded Vanguard Group. He believes that we should choose our investments carefully and be prepared to hold on to them for a long time if we want to see significant rewards. In this quote, Buffett clearly distinguishes himself from day traders who make decisions based on short-term market fluctuations instead of focusing on long-term growth potential. Buffett emphasizes that a wise investor should evaluate a stock by considering the company's strengths and weaknesses. They should look for long-term advantages that the company can gain within its industry. This means looking at the fundamental aspects of the company. Number 10. Never invest in a business you cannot understand. The advice Warren Buffett gives about businesses also applies to every other type of investment. One of the main reasons people lose money when investing is because they put their money into assets or businesses they don't understand. Often, they do this based on the recommendations of family, friends, or even strangers who claim to have made millions from those investments. Sometimes, they invest because a particular asset or business is popular, and they fear missing out, driven by greed. Having blind faith in others without conducting personal research, also known as due diligence, is a major problem for many investors. Before buying any asset like stocks, bonds, REITs, ETFs, or cryptocurrencies, it's important to understand how that asset works. It's crucial to look beyond the promised returns and consider the associated risks as well. Thank you for watching our video. Don't forget to like, share, and subscribe so you don't miss an upload and you can enjoy the excellent content I send your way.